Michelle Schneider, Chief Strategist at Market Gauge, joins us for more now. Michelle, good to have you on. Let's talk U.S. equities. They're failing to ride on that post-earnings rally from NVDA, gave back all the earlier gains. What else is keeping the mood down?
Well, if you've been following the transportation, which historically the Dow Jones Transportation Index was a much bigger factor years ago, it became a factor again over the last couple of weeks in that it was signaling some sort of caution and some sense of an economic contraction in what's a good part of the U.S. GDP and also a big provider of jobs. And so while NVIDIA and semiconductors have been having their party, the transportation, if you look at it through the eyes of IYT, continues to descend. And that is definitely spooking people. And it could be for a myriad of reasons, not the least of which, of course, would be based on what the Fed has recently said, higher for longer kind of thing. But that's kind of been there for a while. So we're waiting to see why. I don't think we know the solid news yet. It's what's keeping retail down, transportation down, and as a result, some of the small caps as well.
Right. So that is something we will have to monitor to find out more about. We also heard from Fed Reserve officials over the past few days. They are intent on keeping those rates higher for longer. The U.S. economy, though, looks robust enough to withstand, another extended rate pause. But how long more, you think?
Well, it seems to me that right now, if we looked at things, there's a certain level of normalization in aspects of the CPI and in the federal funds rate, which is why the Fed feels relatively comfortable keeping things higher for longer. And of course, the service part of the inflation remains sticky. If we start to see that services come down a little bit, then it's possible we could still see cuts this year. But if everything stays the same, I think what we're really seeing now is the divide between the companies that can survive higher inflation and higher interest rates and those that cannot because they've never had a good earnings or good balance sheet to begin with. And that brings us back to NVIDIA, which of course is just blowing out the revenues because of the data centers that they're building and AI, of course, being the future.
Yeah, and that NVIDIA earnings, as you talked about, a blowout set of numbers there, plus that 10-for-1 stock split. And then it also issued another bullish sales forecast. Where do you see the NVIDIA stock headed?
Well, if we're looking at it from the 10-to-1 split, I love the idea that people who have stayed away from that stock will now feel a lot more comfortable getting in at around $100 a share as opposed to over $1,000 a share. And so it's really hard to say where it's going to go, although from what we heard from the CEO, he's extremely optimistic that more and more companies are continuing to make deals as they're providing the chips for these essentially accelerated computer data centers. And if that's the case, it's possible that we could see, I'm not sure at these levels, but we can see from $100, it continue to go on up. The big question really is, how is that going to impact everything else? And at what point does it get so stretched that even that has to come down to some level of a correction? And I think that's what a lot of people are looking out for right now after today's action.
Yeah, and also the question remains whether NVIDIA's fundamentals allow it to continue to deliver the sort of numbers that could justify this run-up in its stocks. So with the 10-for-1 split, we could expect the stock to climb further, but the question now remains whether fundamentals are in place for, future earnings to meet that value.
And there's always the unknown. I mean, the story, obviously, of China and Taiwan is something to keep an eye on. That would certainly affect the chip business. And we've already seen evidence of China saying that they don't want to be purchasing NVIDIA chips. Of course, that's what makes the market so exciting, in that you never really know what can emerge to upset the apple cart. But what I think the bigger picture to look at is that even if we do see something that brings down NVIDIA before or after the split, will it be a buy opportunity at some decent correction? And I think the answer clearly is yes, because they don't really have any competition at this point.
Right. Michelle, at the same time, the U.S. SEC just a while ago approving applications there from the NASDAQ, CBOE, NYSE to list spot Ether ETFs, and that obviously paves the way for potential trade later this year. Where are some of the highs that you see Ether moving to, and how would it bode for the wider cryptocurrency space?
Well, there was also two other pieces of news that I think is very positive for the whole crypto space. One is that legislature passed yesterday that they're not going to necessarily look at cryptocurrencies as a security, which means they get a pass from being over-regulated by the SEC. That was positive. And they also passed today that the Federal Reserve and central banks cannot create a digital currency. So if you put those all together, it should be extremely positive for Ethereum. We have to get through 4,100. Interestingly enough, that was this high of the year so far. And we haven't even gotten that with all this good news. So it could be that people are still perceiving, even with this, as a risk asset and not necessarily something that's going to depart and become an independent factor from the overall market. If that happens, then we're looking back at highs that we had back in 2021 when it was up at 4,900, and then we can see what happens from there.
All right, Michelle, many thanks for joining us this morning. Michelle Schneider there, Chief Strategist at Market Gauge.